Ever wonder how two global powers would team up to save a currency? Japan and the US just did something so rare it's practically unheard of, coordinating a joint intervention to prop up the yen. But here's what makes this really interesting. It's not just about saving a currency, it's about revealing how interconnected our global economy has become. When the yen hits 40-year lows, it doesn't just hurt Japan, it ripples through trade, inflation, and even political stability. And yet, here we are, watching Washington and Tokyo act like a tag team to stabilize it. What does that say about the fragility of our current system? Personally, I think this is a wake-up call for anyone who thinks national economies can operate in isolation anymore. The yen's freefall isn't just a Japanese problem, it's a symptom of a deeper global imbalance. Let's unpack this. The US stepping in as a friend to Japan isn't just diplomatic fluff, it's a calculated move. Trump's comments about being always there for Japan sound like a campaign slogan, but the reality is more complex. By intervening, the US is indirectly protecting its own interests. A collapsing yen means higher prices for American goods, which could stoke inflation here. And if you take a step back, this raises a deeper question. Why is the US even involved in this? It's not like the dollar isn't already the global reserve currency. This feels like a power play to maintain influence in a world where China's yuan is slowly gaining traction. What many people don't realize is that these interventions aren't just about currency values, they're about control over the flow of capital and trade routes. Then there's the historical angle. The last time Japan and the US coordinated on the yen was after the 2011 earthquake. Back then, they were trying to weaken the yen to boost exports. Now, they're doing the opposite. This shift highlights how much the global economy has changed. Japan's current struggle isn't about competitiveness, it's about inflation, which is a problem even for the US. But here's the kicker. Japan's Ministry of Finance is signaling they'll keep intervening, which is a bold move. In my opinion, this shows they're desperate to avoid a spiral where higher import costs erode public trust in their government. And let's not forget the Bank of Japan's recent hints at rate hikes. If they raise rates too aggressively, they risk triggering a financial crisis. It's like walking a tightrope while everyone's watching. What's even more fascinating is the timing. South Korea also jumped into the fray by buying its own one. This isn't just a Japan-US issue, it's part of a broader pattern of Asian countries trying to shield their currencies from US dollar dominance. But here's the catch. These interventions are temporary fixes. The yen's decline is driven by structural issues like Japan's aging population and massive debt. No amount of buying yen will solve that. A detail I find fascinating is how the dollar initially dropped after Trump's comments but then rebounded. That volatility shows how fragile these interventions are. It's like trying to hold back a flood with a bucket. So what does this all mean for the future? If the US and Japan keep collaborating, we might see a new era of global economic coordination. But I'm skeptical. This feels more like a stopgap measure than a long-term solution. What this really suggests is that the world is entering a phase where no single country can manage its economy in isolation. The yen's fate isn't just about Japan, it's about the entire web of trade, debt, and political alliances. And if you're still wondering why this matters to you, here's a thought. The next time you buy something made in China or Germany, remember that the price you pay might be indirectly influenced by a currency war playing out between Tokyo and Washington. The real question isn't just how the yen will recover, it's whether we're all ready for the economic chaos that comes when the old systems break down.